oil stockpiles rising and, of course, the demand outlook still uncertain. Where does that leave large African producers such as Nigeria and Angola? Well, CGTN's Ramah Nyang explored those concerns with Elsie Mbugua, the managing director at Leawood Energy.
We've been seeing a downward pressure on the crude differentials, and especially for West African grades. So Ramah, these are Bonny Light, Forcados, Qua, and they continue to see a deeper discount. So between 30 cents to upwards of 65 cents sometimes. And what that is that deeper discount against the Brent benchmark is on rising export volumes in the Mediterranean. And that has lent the availability of large volumes of unsold cargoes in West Africa. So as you can imagine, a deeper discount for a lot of these African grades, which tend to be light sweet grades, is less revenue for these African oil exporting countries.
Let's just dig into that for a moment, because, and this is a bit of a layman's question, but usually the question then becomes, if you've got all this crude that you're still pumping out of the ground, but it's not essentially moving at the volumes, at the pace that usually they have historically, what then do you do with it? Because demand clearly isn't coming back overnight with COVID being, inflicting the economic damage it's inflicting across the world.
You have to look at the entire value chain to make that assessment. So first, let's start. So China is recovering. Japan is recovering. Now, of course, that has been offset by India, which is the third largest, importer, and that has sort of, kind of dimmed that recovery a little bit. In addition to that, you have to also remember that during the month of April, which we're currently in, and part of March usually is when you see a lot of refineries go into maintenance, meaning they weren't picking up as many barrels as we would expect. And then the last part that you have to think about, is just what traders do. They're known to essentially come in and take advantage. They perfect the art of arbitrage. And so what we saw last year, around the March, at the beginning of COVID, is that they bought up a lot of these barrels and essentially stored them. On tankers, on land storage, and usually they're, kind of waiting it out until demand recovers.
I'm glad you brought up the refinery question, because for a lot of markets that are essentially net importers, like Kenya, for example, a lot of the fuel we import essentially comes from refineries in India. Given what we're seeing in the country, the explosion of COVID cases over there, do you think we might be seeing some potential supply disruptions in the importation of refined fuel coming into the continent?
Yeah, not so much. I think much of it, not necessarily India. I think that would impact crude oil. And obviously the output from a refinery standpoint, that will certainly impact. But I think on the continent, much of the petroleum products are priced off of Murban crude, which is Middle Eastern. And we haven't seen that part of the world greatly impacted. So no, I wouldn't say that we will see an impact in terms of the flow. I think the sustained oil prices that we're currently seeing right now were completely off of the back of a perceived global economy recovery, which now, again, as I mentioned earlier, is being tested.
Okay, so let's try and look ahead. When OPEC meets again in June, what do you think will have changed by then? What are the factors that they will have to take into account when they're trying to figure out whether to essentially hold their fire or perhaps even cut production a little bit?
It's a tricky place where OPEC is right now, but the path of the COVID pandemic will be the overarching factor impacting the near-term pace of the recovery. So particularly with these COVID-19 variants that we're seeing in India, for example, and Brazil. We're not sure where else it will land. And so I think this will require a lot of vigilant monitoring by OPEC. And so despite all the wide-ranging stimulus that we're currently seeing all throughout the US and Europe, I think what was perceived as the early signs of a return to normalcy, I think right now we're in an awkward, OPEC is in an awkward counterbalancing place. And they will need to keep monitoring it to ensure security of supply. I think one other thing to mention, Ramah, I think although not imminent, it's a further rise in inflation, especially in the US and the Eurozone, which may cause some tightening of monetary policies. And also the other thing to watch out for is any trader, sort of elated disputes between the US and China, which if that occurred, could drastically impact demand.